Hello, everybody. We'll get started with the fundamental analysis webinar at this time. My name is Troy. I'm a senior account manager with AvaTrade. Before we get started on the charts and such, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you. If anyone runs into any trouble as we're going along, just let me know. As always, keep in mind, all investments have risk. Trading, FX, spread betting, options is no different. There's certainly risk involved. No one trade is guaranteed to profit. But with that said, we're obviously all here because there is a nice potential for profits if you manage things in a way that makes sense for your risk management. Then you should be able to control risk in a way that makes sense for you while going after what can be quite significant profits, obviously. You can read our full risk disclosure statement on AvaTrade's main website if you wish. Also, keep in mind that what we cover is not meant to be financial advisement. We're coming from an educational perspective, hoping to add more tools to your tool belt to make you maybe a bit more knowledgeable before you go into a trade about what's happening in the news, in the markets, and obviously on the charts with entry points. Now, when we talk about fundamental news, and we've gone over this many times in the webinars, we'll only take a minute. There are two main types of fundamental news that we look at. One being more predictable, regularly scheduled economic events, and another type of fundamental news would be what we call extraordinary economic events. And so the regularly scheduled stuff would be, survey numbers that come out, PMI numbers, unemployment figures, things that we know the exact day and time and the topic that will be released in terms of the data, the information. And so those might be a bit more friendly in terms of planning for the timing of things and what asset it could likely affect, compared to the extraordinary economic events, such as breaking news about anything that could move the markets. Lately, it's been stories about, drug treatments that are having positive results, or a vaccine maybe that might be coming faster or slower than expected, economies opening back up, new outbreaks someplace. So it's been centered around this virus, this pandemic lately with the extraordinary news, but there's been some others in there as well. Unexpected news, maybe specifically about oil cuts. Today there's an article that came out about Iran and Venezuela and maybe more oil that could be coming to the market because of them, and some dealings that they're doing. And there's other extraordinary news as well that has come out. We'll take a look at both types, what's happening today. In general, it's a slower market day today because it's a bank holiday in some areas. In the US, it's a holiday, and some other areas around the world. And so the markets are a bit slower. Some assets have already closed as of today, some of the indices and such. But there's plenty to look at. There's plenty of movement on the markets and things that you could prepare for tomorrow as well, even if a particular asset's not moving right now. Okay, so with that said, interrupt me at any time. Type your questions, give me your input, suggestions. It makes for a better session that way. All right, so let's take a look then at what's happening with some of the fundamental news. And so one thing you'll see is that some numbers came in out of Germany that has really affected the mood today, because there's not a lot happening today. And so, and if we look up here, we can see Memorial Day holiday in the US, bank holiday in the United Kingdom, holiday in Singapore, holiday in India. So some major markets around the world that are maybe only partially running or closing early, that sort of thing. And so the news that came out of the European Union, specifically the German announcements, better than expected. 3 bullhead announcement, which means it would expect to have high impact on the euro and really on the markets in general. And there was expected to be an improvement in the business climate index, and it improved even further than that. Okay, and then we can look over at German business expectations, better than expected by quite a bit as well. And so as some of these economic shutdowns are being reversed, as phase 1, phase 2, some places have these different level phases that they're enacting to come out of quarantines, as those are occurring, the business sentiment is picking up. Okay, and so this had an effect on the sentiment today. I'm reading a question, is why I got quiet for a minute here. Just give me a second. Okay, so on a daily basis, the question is, on a daily basis, how do you go about your fundamental analysis? When do you do it, etc. I think it's smart to get an idea early in the day about fundamental news, and even the night before as well. Okay, and also right before you trade, so you can see what is the latest breaking news, what's the latest fundamental news that just happened, and also have an idea of what occurred through the day up to that point. Okay, very good question. But always a quick look. Only takes 5 or 10 minutes to do what we're doing right now before you jump on the charts. Okay, so I can tell you real quick, positive sentiment early in the day from the European announcements. I can see the futures have been green all day. If you look this morning, they were green. First thing when the markets opened, futures were green, and the volatility index was flat or down, meaning fear was down, meaning positive sentiment. The VIX volatility index was down, and futures were green. Okay, and so real quick, with a quick look, you can get a feel for the sentiment. All right, Kelly, what you're looking for what do you mean funda news? I'm not sure what you mean. Yeah, we're looking at the volatility index for a general feel of fear, fundamental news. Yeah, exactly. So everything we're looking at is fundamental news right now, Kelly. Okay, so the volatility index gives a feel of sentiment for the day. The futures also. The futures were in green from early this morning. Okay, from when the market opened. So that tells you right off the bat, ooh, positive sentiment today, all the way from this morning. So you might know just from this quick look at the futures and the volatility index, and this was true this morning. Futures green, volatility index dropping, meaning fear dropping. Futures green, meaning positive sentiment. So you would have known, okay, maybe I would be buying on the major indices. Maybe I'd be buying on oil, because oil tends to climb when there's positivity about the economies. Okay, general idea, quick sentiment view. And then we look at specific headlines through the day. German sentiment survey boosts stocks. Okay, we just looked at the sentiment numbers. Those were the numbers we just looked at from earlier today. So there are headlines about it. It was so important, right? We see other headlines. Italy reports 92 coronavirus deaths. On Monday, just 300 new infections. It sounds bad at first, 92 more deaths, but the second half of that is just 300 new infections. They're getting lower and lower and lower in terms of new infections and deaths, in terms of new deaths. And so we keep seeing positive sentiment headlines. Okay, this was the story today. Positive headlines from all the way this morning. Futures in the green, volatility index dropping. Okay, more positive headlines, right? Nissan says preparing to gradually restart Mexico operations. Everything's the reverse of what it was a month and a half ago, right? Instead of saying everything's shutting down, the headlines now are reading things are starting to open. Okay, headline after headline. Lufthansa and German government agreed a $9.8 billion rescue package. Again, positive sentiment headline, creating momentum through the day today. Lufthansa, big airline, big company, right? Going to be bailed out, rescue package. Boy, that's probably good. in the short term anyways, right? Too much public debt in the longer term maybe is not good for an economy, but in general, that should add some stimulus and some positive momentum, right, with the headline. But not to be unrealistic here. So far, everything was positive that we looked at in terms of the sentiment. There are some possible triggers out there to reverse things. Iranian tanker docks in Venezuela port. Okay, we all realize, maybe some don't, but most of us probably know Iran has sanctions on it from the US, not allowing them to sell oil. What do you think might happen in this situation? Okay, the US already doesn't get along with Iran or Venezuela. Okay, Venezuela's got a dictatorial regime. Iran has a dictatorial regime. Neither country likes the US. US pretty much doesn't like either of those countries' policies. And there are sanctions on both countries that are going to affect this whole oil situation. So I would say keep your eye out for more headlines about what this could bring. Potential fear on the markets, a situation like this. Okay, what kind of action might the US take in response to that? Oil tankers docking in Venezuela from Iran. Okay, so that's something that for two reasons could hit the markets. One is if there's more oil that's going to be a hit in the market because of this, that could pull oil, kill some of the momentum on oil, right? And at the same time, if there's some tension between US and Iran, you know, that could spook the markets a bit in terms of indices and such, if there's fear of some kind of war outbreak or something. So that's something to keep an eye on. It really didn't affect the momentum today, but it's a potential story that could develop. Also, the China situation with the US doesn't seem to ever die. Here's some more tit for tat going back and forth between US and China. There was a headline about Hong Kong as well. US is not happy about the crackdown on Hong Kong, which basically Hong Kong believes it's an independent state almost from China with independent rules. They're more of a free enterprise, capitalistic society in Hong Kong, and the rest of China is more dictatorial and less free market. And so China is hurting pretty bad economically, and they seem to be wanting to crack down now in Hong Kong. And the US doesn't like that. So another possible trigger here for fear on the markets to keep an eye on. So while you're riding the momentum today, if you did, great, the positive momentum that was easy to see from early in the morning with a quick fundamental look, you still need to keep in mind there are these types of unexpected news that if it breaks the wrong way, could swing the markets in a moment, okay, in a short moment. So you always got to look at the other side of all this positivity we saw here. Green showing there, positive headline, positive headline, positive headline, right? But let's be realistic. The world's not all roses. And so we have to keep an eye on the fact that there are breaking stories that could go negative in a hurry, okay? Bonachile, you're asking when do you know if it's safe to trade? No trade is guaranteed. No one trade is guaranteed to profit. But what you need to do is determine what does safe mean for you. And that's for all traders. Put your stop loss in a place that makes sense if you like to trade with a stop loss to limit risk. Take trade sizes that are appropriate for your balance size and for the amount that you're willing to risk in a move. Okay, so what is safe is different, is a different definition for each trader. And so you have to find what's right for you in terms of how much you're willing to risk per move, per day, per week, etc. And if you need help with how to calculate those exposures, how to know what trade size risks how much to what spot on the chart, talk to your account managers. It's very easy to figure. And we can do some practice here in the webinars as well, which we typically do with that type of risk management stuff. Okay, so as I then go into my demo account here, and you're more than welcome to be on your live accounts. If you like the information, you see something you're interested in, by all means, you can act accordingly. We're looking at oil here, and I'm on 1 hour candles. So if we go back to the start of the day, let's see where we were. Okay, 24th, 25th. So the market opens here. This was Friday's close. Okay, on the 22nd, Friday's close here. Today's opened down and then recovered back up. Okay, we can see that. The open came down, and then all of that positive sentiment that we saw that was visible from early this morning, okay, it took over and it rode the price of oil back up. So we can look at 30-minute candles, and we can say, once you saw the momentum, you could have drawn, and the sentiment, the fundamental news, you could have drawn a resistance level. Here's a major one that you wouldn't have had to gotten in even early in the day. Could have waited until later in the day to see the news. Resistance. Here's the open back here. Okay. It opened down, right down here. And then up it went, formed resistance, and then here it breaks through the resistance. Easy strategy is pending order above the resistance, buy. Okay. So you had an opportunity to buy right here, even if you weren't trading first thing in the morning. As soon as it broke this resistance, you saw all the positive sentiment headlines. Futures were green, volatility was down. Once you saw all that, you could say, okay, I think it's ripe for oil to climb. So then you see the resistance level, you draw the line, you put your pending buy stop order above the resistance. As soon as it broke through that resistance level that it established here, that's your spot to buy, and then it climbed another 50 cents. Okay, it broke through, it spiked 50 cents up. Now it's back to that support level, the old resistance level, which could act as support now. Two things you could do here. Okay, two things you could do now if you didn't trade on the spike up with oil. One is it's on the support level. You don't have to risk much to try and go after the positive sentiment for it to climb again. That's one possible move, is to do a market buy off the support level now and trade up with your take profit, if you're scalping, at the first resistance level right there. And where might you put your stop loss if you did that? If you're going to use a stop loss, let's say you're buying up off this support level now, where would you put your stop loss maybe? Yeah, exactly. Maybe just below the support level. Okay, so if you were buying off this support right now, you might put a stop loss just below the support. If it breaks it, okay, you're out. Okay, and if you're scalping, the first spot to take profit would be this first resistance level, which matches this resistance level over here. Okay, look how perfect that reversed off this resistance over here. This was old resistance before this big drop. So as this climbed back up, it right on cue dropped off this old resistance level here and came down. Now it's on the support level. The old resistance here becomes support when it's broken, and there it sits with a small green candle on top of the support. Okay, now there's a little bit lighter volume of trading today, so the bounce off the support hasn't been real strong right here, but that's a limited risk move. So someone was asking, when is it safe to trade? Okay, you could take a very small risk here to be below this support level because it's right on top of the support right now. So if it's going to climb off the support, you don't have to risk much to be below the support to your stop loss for a potential profit that's 3-4 times bigger than what you're risking. Okay, so there's an opportunity with oil. And then you could say, well, what about that headline about Venezuela and Iran? If they're going to bring more oil on the market, couldn't that bring oil back down? Well, at the same time, you're buying off the support because there's been positive sentiment today. You could put a sell stop right down here. If it breaks that support level, you could get in on a sell position, put a pending sell stop. So in this case, you could do a 1-2 move. Buy off the support with the daily sentiment Stop loss below the support if it breaks. If it breaks the support, you have your sell stop ready to go, maybe to ride momentum from that Venezuela-Iran story. Okay? You never know when a story like that could ramp up and create a swing in momentum. So you can back yourself up with a pending sell stop, going with the momentum, the direction of the momentum to begin with, a 1-2 type move. Type OK if you're with me on that. Also, partially, I'm asking to make sure the audio is still running good. All right, great. Thank you. Okay, so that's oil in a nutshell. If we look at where's the limit here before you think this climb on oil might slow, because oil's been quite bullish. Where might it climb to if we get maybe some more positive news tomorrow, let's say? Little longer term move. Well, let's look at 4-hour candles. Do you see any resistance over here if it breaks past 34.5? Look at the high point it hit last week. If it breaks that spot, look over here. There's no resistance on the 4-hour candles going back months. So we need to go to 1-day candles. Where's the next resistance level? Look here. You see this old gap? We've already broken into that gap. You see that? Look, if I follow last week's price across, it entered the gap right here. Okay? So if we draw a line at this gap, the bottom of this gap, right about there, we're almost right at that. So if this uptrend breaks into this gap again, like it did last week, we're looking at the next resistance levels up here. Before it gapped down, this was way up at 41.5, a price level of 41.5. The last time it was in the range of this gap. Okay, this was when oil started its big crash right here. From Friday to Monday, it gapped down like, I know, $8, $10. So we're looking here, if this upward momentum on 1-day candles breaks into this gap, we're looking at a potential climb towards 41.5 if it fills that gap again. And many times, once a movement re-enters a gap like this, many times it will try to fill that whole gap. No guarantee, right? But that's the next level. So while we're looking at micro movements, you know, here, trading up off this support to just be out, you know, 50 cents, 70 cents later, okay, that's one small scalp, right? Bigger picture is if this momentum breaks to a new high above here, we're looking at potential momentum could carry you through this gap towards a much higher price. So that's something to keep an eye on. Kelly, a lot of times once a movement re-enters a gap, it then has momentum to refill the entire gap or a large portion of it because there's no other resistance sitting there. So this movement last week tested it right here, but did not enter the gap. This was Friday and Thursday last week and Wednesday. It came up on the 1-day candles and tested the entry of the gap. And this was a great spot to sell from last week, by the way. Right as soon as it got to where the bottom of the gap was, that serves as resistance. And that's what pushed this back down. Now it's testing it again. If it breaks into the gap above last week's high, that's where you could have a buy stop pending order ready to buy with a take profit at the top of the gap, which is what, if you get in at 35.5, let's say, something like that, if it rises to 41.5, that's $6 per barrel in your position. That could be a huge potential profit. Okay, and you might only ride half the gap to be more certain that maybe you'll have profit, right? Before it could reverse. So there are different ways of playing that, but that gap is significant. The beginning of the gap was significant last week as resistance. If it breaks into the gap with positive news, positive momentum, you could see a large rush up. Okay. Yeah, Charlie, the exact location of where you'd put a pending order is up to you. Okay. 34.5, 35.5. Everybody will see it differently. But the idea is you can see the price level right here that the gap started. When it gapped down, it was here, the top of this red candle, which was, if I point at it, the gap price was 34.1. Okay, it's already creeped above that gap price just now, today. Okay, but I would be looking at last week's high to be significant to me. What's significant to you could be something different. But last week's high on this candle here was 34.6. You see that? That was last week's high, 34.6. If it breaks above 34.6, let's say 35 even, now it really must have had some momentum to try and enter that gap to fill it. Okay? But everyone's different on where would you get in, but the concept is the same. If it's into the gap enough that you deem it significant, then there's a potential for it to fill the entire gap. And you don't have to risk much for your stop loss back underneath the entrance of the gap. That if it drops back out, okay, it wasn't a lot of momentum. For now, you can take a small loss to a stop loss. And then if it re-enters the gap again, then you can get back in again. Okay, this is the way sometimes people will set up. So you could have a buy stop pending order somewhere right up here. Okay, would make sense that if it gets into the gap to what you deem to be significant, boom, you get a buy position with your stop loss back down here, and your take profit potentially near the first resistance level up here, risking a lot less than your potential profit up here. And again, you're going with sentiment. I don't think it'll make the huge move today. Today's a slow trading day, but you could set the buy stop up just in case it does. I think likely a bigger news story has to hit the positive, and then you could see rapid momentum to try and fill that gap. Okay, the key is get your pending order in ahead of time so you're ready for it. If you understand that you don't even have to know what the fundamental news story will be. You have your pending order just waiting for that fundamental news story to hit, whatever it might be. And if it breaks above last week's high, then it must be a pretty darn good story. That's good for oil, right? Okay, so that's a strategy with oil for a longer term move, because these are one-day candles, a longer term move. And then we also looked at a scalping move, trading up off the support, right? That's something that could happen. That could happen in the short term. Yeah, a buy stop, Imran. A buy stop, if we're looking at one-day candles, somewhere where you deem significant enough to have entered the gap. That could be a spot where you might take a shot at it filling the entire gap. Okay, buy stop would be like this. You open the order window, you go from market execution to pending, and you program it as a buy stop, which buys from a higher point than it is now. That's the idea of a buy stop, buying from a higher point. Yes, Kelly. Exactly. Kelly's asking if, when we say sentiment, if it's how you feel about the news that day. And it absolutely, that's what sentiment is. It's what do you think people are feeling about, does it feel positive on the market, or does it feel full of fear and negative? And you can see with a quick scan like we did of the headlines from early this morning, and it would have only taken you 5 or 10 minutes to look like on investing.com, where you saw the volatility index was down and the futures were green on the major indices. Right away, you could see, ooh, positive sentiment. All right, good question. Okay, so let's take a look at S&P 500. What did it do today? Well, these are 1 hour candles here. Look what happened all day today. Up, 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 right? So some of these indices are closed now because of the US holiday, but look at the opportunities you had today. This is going back 1, 2, 3, 4, 5, 6, 7, 8 hours. Go back 8 hours. Somewhere in your day, 8 hours ago, 9 hours ago, when you got up in the morning, depending on your time zone, you could have found the time maybe to just take a quick look at the headlines, look at, is the volatility index up or down? Are the futures green or red? And you could have saw, wow, everything looks positive right now. And then you see the resistance, and you say, wow, why don't I prepare for a breakthrough of that resistance level with a buy stop right up here above this resistance level? Okay. And you can see that was a resistance level from last week as well. So resistance matching this resistance, resistance again. All you had to do was put a buy stop up here and wait for the momentum of the sentiment to see if it would come through for you. And look how easy that would have been. A buy stop buying from up here would have paid nicely. And now it flattened out. You could, if you're scalping, you could have taken your profit already. It's a buy stop beam run. Buy stop buys from a higher point. So if we go back in time 10 hours, you could have looked at the sentiment early today from the fundamental news and prepared a buy stop up here. And look at the breakthrough candle. That's a classic breakthrough candle driven by the sentiment of the day, by the fundamental news. Very simple to read. Very easy to see that that very likely could have happened today, and then it did. Okay, now the question is, okay, great. You keep showing me these great opportunities I could have done. If you didn't, the next question is, well, what do I do? Well, just like we looked at oil, we can see oil still is trying to bounce off that support level. It has some reason maybe to break it. So you back it up with a sell stop pending order with oil as well, in case it drops on that news about Iran and Venezuela bringing more oil on the markets. You never know how seriously someone might take that. So you don't, in trading, you don't have to be right. You just need to be smart, right? In the end, it's about profiting. It's not about having to be right. So even if we think oil should bounce off that support level, why not back that oil move up with a sell stop below the support level, okay, in case it breaks and confirms downward momentum by breaking the support, then you get in on a sell. So we can think the same way right now with some of these indices. Now, if they're not open, then you can't trade on them, right? But it's the same concept. Let's look maybe at the DAX. Okay, doesn't that look like the same asset? Let's do that again. We're looking at the DAX 30. Here's the S&P 500. It looks almost like a mirror image. So it doesn't matter when it's such a global situation with the way the sentiment is now, with global fear or global positive sentiment. You could have put your buy stop on the DAX. Here's the resistance level. Look. Okay, resistance, resistance, resistance. You put your pending buy stop up here just, what, 8 or 9 hours ago, and boom, there it broke through and up it went all day. Okay, type okay if the sound is good for you right now. All right, great. I've got enough responses. I just have someone saying they can't hear. It's just you. Check your audio. Okay. All right. So you get the idea here. If you looked at the sentiment earlier today with the fundamental news, you could have traded up on any of these major indices and found great success today. Very easy moves. Okay. Okay. Good question. So what's the bigger picture if we want to look at the S&P 500? Okay. And again, I think the S&P might be down for trading right this second because of the holiday, but it'll open back up first thing when the market opens tomorrow. So let's look at one-day candles. We see maybe 4 hour, okay? 4 hour candles, we don't see resistance, right? If I use the magnifying glass to come back a little, now I can see our price slowed right here at this little resistance level. So the next level is here. You see this little plateau? Okay. So it goes up, plateaus, goes up, plateaus, goes up, plateaus. You see it's like a step. You see it's like a staircase. Here, here, staircase. okay, up. Each level is the next resistance level. And if we were looking at 5-minute candles, this little step from here to here would actually look larger, okay? So I can see that we've kind of come through some resistance, and the next resistance level looks like it could be here, okay? So now we go back to 1-hour candles, and I say, look how close we are. You see that? I found the next resistance level way back on the 4-hour candles, and look how close we are to it. Look where we slowed. So that's, and you know, I didn't even look at the number, but look at the number here. 2,999. 3,000. Round numbers many times represent a spot where traders see that as the next level of resistance or support. So we can see right here, 3,000 is a significant level, 2999 point whatever. So let's round it off, 3,000. Okay, looks like a significant price level. We saw the step on the 4-hour candles, the step of resistance, we can call it. We could see that that's right at a round number also, 3,000. I think that's a significant level. In terms of the technical analysis, it's certainly a significant level. So now we say, okay, there's been positive momentum. Where's the spot where this might die off? Okay, we're at 29,088, or I'm sorry, 2,988, 2,988 or so. So it's not that far up. So to keep buying right now, technically speaking, maybe it's not the thing to do. And you know, the momentum seems to have slowed today. If we look at the 5-minute, the 15-minute candles, okay, it flattened out, didn't it? It was rising quickly and then up and sideways, sideways, sideways. Okay, so what kind of pending order could you put right up here at this resistance to sell if it gets close to that resistance level that we saw in the 4-hour candles being a significant level? So maybe if it gets to 2,995, right? Sell limit, good. A sell limit. A sell limit pending order, you program it to sell from a higher price. Okay, so if I deem 3,000 as a significant level, and I say, listen, there's been mixed fundamental news. The news today was kind of positive, right? But you just feel like that resistance level could be significant. And you say, listen, there's still a global pandemic. And so as much as there was some positive sentiment today, there was negative news about China and the US that came out later in the day. There's some negative news about Iran and Venezuela, which I'm sure Trump is going to be tweeting about soon enough. So there's some things that you could say, you know what? There's been positive momentum, but where's my next resistance level? I think that could be a spot where it could pull back because the news is not that positive, right? So we say pending order, S&P 500. And if the market's closed on this, I don't think we can set up a pending order, but let me show you how you might do it. Pending order, sell limit means sell from a higher price. 29, 90, I don't know, 95, 96, 97, you pick how close you want to get to that resistance level. So you pick your price that you'd want to sell from. You put your stop loss somewhere above that price that you deem significant enough not to get a false spike to close out your sell too early. So if I'm going to go 3,010, okay. All right, so if I'm getting in at 95, my stop loss is at 3,010. I'm risking 15 whole points up on the indice. So if I have a 1 indice position, I'm risking $15. If I have a 10 indice position, I'm risking $150. It's all relative to your account size. So, you know, 1 full lot is 100 indices. So if I put a pending order of, let's say 0.1, that's 10 indices, right? And so 10 indices with a stop loss of 15 on the 15 whole numbers here. So that's $15 per indice I would be risking to my stop loss from 29.95 to 3,010. That's 15 per indice. If I have 10 indices, then I'm risking 150. If I have a larger account, okay, maybe I'll do one full lot, 100 indices. So now I'm risking 15 times 100, 1,500. Yeah, if I have an account of, I don't know, 100,000, 200,000, then that's a small percent exposure. If I have an account of 1,000, I certainly wouldn't trade this size, right? Be trading some kind of much smaller trade, okay? Something smaller, even maybe smaller than that. It's up to you how much you want to expose. But the number of indices in your position times the distance on the chart tells you how much you're risking. And by the way, the AvaGo app, if you haven't used it, will calculate your exposure for you, okay? If you put on the AvaGo mobile app, if you put this trade size and that stop loss, if you put the trade size and your stop loss mark, it'll tell you how much you're risking to that stop loss. When you put your take profit, it'll tell you how much you would make. So if you're selling from this resistance level, where would it make sense to take profit if you're scalping? $29.95. Let me see if it'll let me set my pending order. Yeah, it did. Okay, maybe market's still moving on this asset because it let me set my pending order. So here's my pending order. Your stop loss would be somewhere above the resistance. Where would it, at the next support level, right? My take profit might be down at the next support level. So somewhere here, right? Isn't this the old resistance? Resistance, resistance. It just broke that resistance today, right here. That should be support if it comes back down. So let's say it comes up to this resistance level, you sell. The first spot, if you're scalping, where the descent might stop if it does drop, would be the first support level, which is here, which is about 29.76. Okay, and so if I'm getting in at 29.95 and I'm taking profit at 29.75, that's a potential profit of 20 and I'm risking 15, right? And let's say the opposite. Imran, you're saying it will retest the support. If this comes back down to this support, let's say today, before any negative news comes out, what kind of pending order could you put to buy off this support down here? So you could do both, couldn't you? Couldn't you put a sell limit up here to sell if it reaches this resistance that we saw in the 4-hour candles, and at the same time a buy limit in case it comes back down to the support? You could have a buy limit buy from this lower point. Okay, so you can do both with little risk, small risk underneath the support here. If you buy off the support, if it hits that price, small risk to the top side of that resistance if you sell from just below the resistance. Okay, I think those are two really nice potential moves. Hans, I think pending orders are great to work with, and the answer is yes. I do work with pending orders because you can't necessarily be in front of the chart for the perfect entry point that you would rather have. Okay, so there's something to be said for momentum and making market moves. And there's also something to be said for patience and getting in at the spot you prefer. Both can have their times. So now you might say, well, I don't want to risk 15. When I sell, I don't want to risk from 95, 29.95 to 31.10. I want to get in right at 3,000. Okay, fine. So have your pending order right there. There, I just adjusted it. Now my pending order doesn't enter until 3,000, right at 3,000. Now I'm only risking 10 if I'm putting to 3,010 my stop loss. And now my potential profit is even bigger because I'm going from 3,000 to 75. I can have a potential profit of 25 and I'm only risking 10. How many times can I be wrong? If I'm risking 10 and I might make 25. If I get in at 3,000 right on that resistance level and my potential profit's 25 and I'm only risking 10, if it goes 10 above the resistance, I'm risking 10 to make 25. Couldn't I be wrong twice and right once and still profit? So when I said it's not about being right, it's about being smart. At the end of the day, the question is, did I profit? Or the end of the week, not necessarily every day, right? I don't care if I'm wrong the first time and it hits that mark. And then if it dips down again and it tests that resistance again and I sell again and I'm right the second time or the third time, as long as at the end of the week, the end of the month, I'm profiting, that's what's important. And many times pending orders allow you to have limited risk with a much better potential profit at strategic spots. Okay? And it's okay to set it up the other way. Some traders will risk more from those strategic locations and have a quicker take profit, meaning I might risk to 3,020 and take my profit only 10 points down. What does that do for you? That increases the likelihood it's going to hit your take profit before it hits your stop loss. So some people do the opposite. You don't always have to think that stop loss should be less distance and take profit should be more. Doesn't always have to work that way, because many times as you get near the resistance, even if it's going to break the resistance and climb, as it gets near, you at least get a temporary dip before it continues up. So many scalpers don't care if it breaks the resistance. They still expect a temporary dip down before it breaks through. And so they're taking a quick profit and more patient with the stop loss. It's another strategy. It can work both ways. Okay? Yeah, exactly, Imran. Good risk management is risk management where you make more than you lose. That's it. And it doesn't have to be done. There's no cookie cutter way. It can be done in more than one way. If you're taking quicker take profit and your stop loss is further away, then obviously you need to have a higher win percentage. You need to win more than you lose. And the flip side, if your stop loss is closer and your take profit's further away, you only need to win less than 50% in order to profit. So it works both ways. But the key is understanding why you're selling or buying from a certain location and understanding that there's something significant about those locations. And we can't see that here till we went to 4-hour candles. And then we realize on the 4-hour candles or the 1-day candles that, there's a significant level back there when we zoomed in with the right candles. Okay, so we could look at the FTSE and it looks very similar. Let me zoom back in on my candles. And so climbing through the day today, FTSE. The Nikkei, climbing through the day today, right? Positive momentum all day. Look at the Nikkei, it gapped up when it opened. It gapped up, all the headlines were positive, the futures were green. Boy, it didn't take too much to say, okay, let me draw my first resistance level off this gap candle. It pulled back. There's the first resistance. It climbs and breaks it, and up it went. Another easy buy stop. Okay, and so I think this is probably a good spot to stop today. We've looked at oil. We've looked at major indices. I think you'll have huge opportunities. Some of them are still running. The major indices, some of them have closed a bit early. Just check them out. And I think you can find a lot of success, not just on short-term trading still today, but I think more through the week. The trading's a bit slow today, but you can get your entry points for sure in today with your pending orders and such. Maybe we'll hit on Bitcoin on Friday. Okay. Sorry, we didn't get to that. All right, everybody. Thank you for joining. It's been a pleasure. Good luck with your trading this evening and through the week. Till Friday. Bye for now.